In the first lesson, we talked a little about the double entry system of bookkeeping. This method of recording the transactions enables the checking of the entries before proceeding further. Each transaction is recorded in two accounts, double entry, once on the debit side of an account and on the credit side of another account. For example, on February 7th, sold goods on credit to Tom Redman, costing $188. Ask yourself, which two accounts am I going to use? We are going to use the sales account, where all sales are recorded, and the personal account named Tom Redman to record that he has not yet paid and that he is therefore a debtor, someone who owes money to the business. At this point, I will introduce the first rule of bookkeeping to explain how this transaction was recorded and to make things perfectly clear. The rule states that all value coming in is recorded on the debit side, while value going out is recorded on the credit side. Therefore, we have value going out from the sales account, so we credit the account. On the other hand, value is coming into Tom Redman's account, and so we debit that account. Notice how the ledger page is ruled and that each account has a folio F. Number has a folio number for easy cross-referencing. We write the date of the transaction, and in the details column, we refer to the corresponding account. That is, in the sales account, we feature Tom Redman and vice versa. The F numbers are recorded in the same way. In the next lesson, we will talk about the second rule of bookkeeping and accounts. And while referring to the diagram of the first lesson, we explain about the importance of capital and how it is recorded in the books. It would be a good idea to rule a ledger page and start keeping a cash book. Follow the rule of debiting value coming in, that is what you receive, and credit the payments that you make, value going out. This would be good practice, I believe.